How could a country with a rich history like Egypt, known for its ancient civilization and architectural wonders, find itself on the brink of financial ruin because of a new capital? This is a question that has puzzled many. Egypt, the cradle of civilization, a land that has witnessed the rise and fall of pharaohs, the building of the pyramids, and the evolution of one of the most significant cultures in human history, now finds itself grappling with a financial crisis, the likes of which it has never seen before. And at the heart of this crisis is a new capital, a city that was meant to symbolize Egypt's modern aspirations. But instead of propelling the country towards a brighter future, it seems to be dragging it towards an abyss of debt and economic instability. So what went wrong? To understand this, we need to delve into the sequence of events that have led to this financial crisis. The idea of a new capital for Egypt was not born overnight. Indeed, it was a thought process that spanned decades, with various political and economic factors playing a role. The idea sprouted from a desire to decongest Cairo, Egypt's bustling yet overcrowded capital, and to spread development more evenly across the country. What better way to achieve this than by creating a new state-of-the-art city, a beacon of modernity in the heart of the desert? It was a tantalizing prospect, one that promised to stimulate the economy and create countless jobs. The initial plan was met with both skepticism and excitement. The financial implications were colossal, yes, but the potential benefits seemed to outweigh the costs. Indeed, the idea of a new capital was seen as a symbol of progress and a sign of Egypt's ambition to reclaim its place on the global stage. However, as we will see, things did not go as planned. Breaking ground on a new capital is no small feat. The construction phase of Egypt's new capital was a monumental task, perhaps even Herculean in its scale and ambition. The Egyptian government envisioned a city that would rival the world's leading metropolises. And this dream came with a hefty price tag. The costs of the project were staggering. The government had to secure billions of dollars in funding, a daunting task for a nation already grappling with economic challenges. The money needed to flow like the Nile, abundant and unending, to cover the myriad expenses. There were costs for infrastructure, for buildings, for roads, for utilities. The list seemed endless. To finance this ambitious endeavor, Egypt turned to international investors. The country courted companies and countries from around the world, promising a piece of the new capital's future. China, the United Arab Emirates, and Saudi Arabia were among the key contributors. Their investments, however, came with strings attached, further complicating Egypt's financial landscape. As the city began to rise from the desert, the scale of the project became increasingly apparent. This was not just a city, it was a nation's dream materializing in concrete and steel. The new capital was to house over 6 million people, boast a park double the size of New York's Central Park, and feature a theme park larger than Disneyland. But as the scale grew, so did the costs. The financial difficulties began to surface during this phase. The government struggled to keep up with the mounting costs. The money was flowing out faster than it was coming in, creating a financial whirlpool that threatened to pull the entire project under. Budget overruns became the norm, and the dream of the new capital began to look more like a financial nightmare. Yet, despite the mounting problems, the project carried on. The construction continued, the costs kept rising, and the financial situation became even more precarious. The new capital was taking shape, but at what cost? Despite the mounting problems, the project carried on, leading to an even more precarious financial situation. As the new capital took shape, so did a financial crisis of monumental proportions. In a bid to modernize and expand, Egypt had embarked on an ambitious project, the construction of a new capital city. However, the country was soon to learn that ambition comes with a hefty price tag. The new capital's construction led to an astronomical rise in public debt, a consequence of the government's heavy reliance on borrowed funds to finance the project. The country's economic structure was already fragile, and the additional burden of this debt only served to exacerbate the situation. The Egyptian pound was devalued, inflation rates skyrocketed, and foreign direct investment dwindled. Regular citizens bore the brunt of these changes. Prices of everyday commodities soared, and the dream of a better life in the new capital seemed increasingly out of reach for many. Internationally, the crisis was met with concern. International Monetary Fund, World Bank and other financial bodies voiced their worries about Egypt's escalating debt and the potential for a full-blown economic meltdown. Despite these warnings, the construction of the new capital continued unabated, further draining the country's already depleted resources. The new capital, initially seen as a symbol of progress and modernization, became a significant factor in the financial crisis. The cost of the project, estimated to be several times the country's annual budget, was a financial albatross around Egypt's neck. It was a dream that had been pursued without a clear understanding of the financial implications, a dream that was now turning into a nightmare. The new capital, with its gleaming towers and wide boulevards, stands as a stark reminder of a project that promised so much but delivered so little. It's a testament to the dangers of unchecked ambition and the importance of prudent financial management. The consequences of this crisis are still being felt today, and the new capital stands as a symbol of a dream that turned into a nightmare. So what can we learn from Egypt's new capital and its financial implications? We've journeyed through the birth of this ambitious idea, the construction phase, and the financial crisis it triggered. The dream of a new capital emerged with the hope of solving overcrowding, unemployment, and infrastructure issues. However, the financial burden it imposed has led Egypt into a deep financial quagmire. The construction phase, although a beacon of job creation, was marred by staggering costs and unsustainable financial practices. The ensuing crisis was not a surprise, but rather a predictable outcome. From this, we learn a crucial lesson. Grand vision should be balanced with economic realities. Development must be sustainable, and financial implications thoroughly evaluated. Ignoring these principles can lead to dire consequences. This tale serves as a stark reminder that while ambition is commendable, it should be tempered with pragmatism. As we look towards the future, we are reminded that progress should not come at the expense of financial stability.